Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and today is Monday, November 17th. Let's do a little recap. Right? The end of last month, the market staged about a 1,600-point rally over about a 5-day period, and as you all know, I thought it was the beginning of a good rally and continue. I expected the market to continue on up, and I thought the lows were in, but the market wasn't going to have it that way. So after the 1,600-point rally, the market retraced the entire rally all the way back down, and we assumed it was going to test the lows, and we thought we'd get a bounce off the lows, which we did on Thursday. The market closed up well over 500 points, but from bottom to top, it was closer to almost an 800-point day from the low of the day to where it closed. And it was quite impressive, and everybody who thought the market could do better was encouraged, including myself. Yeah, but, here we go. On Friday, we give back half the rally, and on Monday, today, we gave back the other half. So as I wrote in my blog today, how many times can we keep coming down to test these lows without the market finally breaking? Each time they come down increases the odds that this low is not going to hold, and we're going to have another leg on the downside. The probabilities are changing in that direction. And we've been looking at a trading range, the old low and the resistance area. But now that we've had these failed rallies, the indexes are taking on somewhat more of a bearish look than just a plain old trading range. So I'll point that out to you in the final segment. And you can be the judge yourself. But there's definitely a negative look to the pattern, and we just can't keep coming down expecting the market to keep bouncing off these lows. And after today's action, they just can't seem to hold these rallies. So in the final segment, we'll take a look at all the indexes. I'll show you what I'm talking about. And I also have a new idea tomorrow. It's on the short side, and the stock is INFA. So in just a moment, we'll take a look at that chart. I'll show you how we can take this idea and turn it into some money, and then we'll take a look at all the major indexes. So don't go away. We're looking at the daily bar chart of INFA, Informatic Corporation. Zoomed out pretty far, but I want to track this and show you what I expect to happen. First, the stock breaks down. It breaks a support area right here where I have the straight line. Comes all the way down, makes a new low, has a kickback rally right back to this resistance line right here, because this was support, see it? And once it breaks it, it becomes resistance. So as it comes back up, it runs into resistance, and now it's rolling over, and it's going to come right back down. And I expect it to make a lower low than this low. Just as this pattern broke this low here, I expect this rollover to break this low down here also. Okay, that's basically how I envision what's happening here. So we'll zoom in, and I'll give you the stats on it. Okay, we'll be looking to sell the stock short tomorrow anywhere between where it closed, 1285, all the way back up to yesterday's high, or maybe even a little bit higher, because this is resistance. The bottom of this pattern right here is the resistance, because it's breakdown, kick back, and then go again on the downside. So anywhere between 1285 and let's say 1350 would be a great spot to get the short off. I don't know if it's going to rally tomorrow. We've already had our kickback rally. This is the kickback rally here this day, and now we're starting to roll over. So, if you get anything off above last night's close, I think you'll be doing well. Target on the downside is $8.50. I'll have to zoom way back out again to show you that. Okay, that's right down here. This is my target. $8.50. It's this whole support area over here. Buy stop. A close above $14.35, which would be a close above that level right there. Okay, so let's recap this. This is INFA. It's a call on the short side, and depending on where we get this short off, we can make ourselves $4.50 to $5 on the trade. All right, let's go take a look at the indexes, because I want to show you the new look that seems to be developing. We're going to start with the QQQQs, because it's what I'm trying to point out to you is it's more prevalent in this. You'll be able to see it in the other indexes, but this one here, it's easier to see. Now, at first, we thought there was a possibility that we would remain in this trading range right here, this being the low, this being the high, and we would bounce back and forth, and we would break out one way or the other. And that left us some encouragement that maybe the market would try to stage some sort of a rally. But as these rallies start to fail, this pattern now is starting to take on more of a look of a descending triangle, which we know is a bearish formation. Now, I'm not saying we can't rally back up one more time up into here, but like I said, we just can't keep coming back down to these areas and expecting the market to rally. So we've got ourselves a descending triangle here forming. That's one way of looking at it, or you can look at it as a trading range. But I think this is starting to paint a bearish picture. So we'll go take a look at the rest of the indexes. Okay, here we have the SPY, basically the Standard & Poor's 500. Yes, you can see it, this way as a trading range, but with all these rallies failing, it also has this descending triangle look. Right there it is. So it's getting clearer and clearer. So I just think that the odds are starting to increase that this low here may not hold. And that's the message I'm getting from this new look that I've discovered. All right, let's take a look at the Russell 2000. Here's the Russell 2000, and that's one way of seeing it in a trading range. This being the low, this being the top. But the other way of looking at it is this bearish look of this descending triangle coming down on top of us. Here's the transportation average. It's not quite as clear, but the look is still there. And this is our third time down here, so I always say usually the third time down they don't usually hold. So we'll be watching this carefully. And here we have the Dow. The triangle is not quite as clear and defined in the Dow as it is in the other indexes, but it's there. These declining tops, and like I said, we may not break tomorrow or the next day. We may try to stage another rally, but each time we come down to this area and we retest it, the odds just start to increase that it's just not going to hold. And then we're going to go into another leg on the downside, which could take us down another I mean, I just don't know. 1,000, 1,500 points. So we'll just have to see how it goes. Once we get a big close below this low, though, we'll know. We'll know because all of this will be locked in above us. Okay, so that's my view of the market. Until tomorrow, this is TK signing off.